Hey everyone, and welcome back to the channel. Today, we're diving deep into the digital storage world to talk about two unsung heroes, Silicon Motion Technology, ticker SIMO, and Phison Electronics. These companies are the brains behind the super-fast storage in your computers, phones, and even AI servers. We're going to break down what they do, how they make money, and what it means for potential investors, all in plain English. Visual, on-screen text, SIMO versus Phison. The storage controller giants. Visual, logos of Silicon Motion and Phison side by side. First off, what exactly do these companies do? They both design NAND flash controllers. Think of these controllers as the traffic cops for your digital data. They make sure information gets written and read from your SSDs and other storage devices at lightning speed. Visual, animation showing data flowing from an SSD with a controller chip. Highlighted, but here's where they really differ, and it's super important for their business. Visual, split screen with Silicon Motion fables on left and Phison hybrid on right. Silicon Motion, SIMO, operates on a fables model. Imagine them as the brilliant architects who design the blueprints for a magnificent building, but they don't actually pour the concrete or lay the bricks. They focus 100% on designing these crucial controller chips, then outsource the actual manufacturing to giants like TSMC. This means they're very asset-light, don't tie up a lot of cash in factories, and usually enjoy higher profit margins. Their money comes purely from their intellectual property and design expertise. Visual, on-screen text, SIMO, pure design, high margins, TSMC partnership. Phison Electronics, on the other hand, uses a hybrid approach. They also design their own controller chips, but they take it a step further. They actually buy huge amounts of raw memory chips from manufacturers, combine them with their own controllers, and then sell entire finished storage modules, like custom SSDs, to brands and big companies. Think of them as both the architect and the general contractor. This model allows them to generate much larger revenues, but it also exposes them to the volatile prices of raw memory chips. If memory prices crash, it can hit Phison harder. Visual, on-screen text, Phison, full systems integrator, high volume, exposed to memory prices. Now, let's talk about the roller coaster ride that is the semiconductor industry. It's incredibly cyclical. Visual, line graph showing revenue trends for SIMO and Phison from 2021 to 2025, highlighting peaks and valleys. Visual, on-screen text, semiconductor cycles, boom, bust, recovery. From 2021 to 2022, during the pandemic, everyone needed more hardware for remote work and gaming. Revenues and profits for both SIMO and Phison soared. But then came 2023, a huge bust. Demand fell, and companies were left with tons of unsold inventory. Ouch. The good news? A strong recovery started in late 2024 and accelerated through 2025. What was the big driver? You guessed it, artificial intelligence. AI infrastructure needs tons of fast storage, and the PC market also stabilized. Both companies showed resilience, with SIMO's net income growing by almost 37% in 2025, and Phison hitting record profits. Over this 5-year period, SIMO actually had a slightly better revenue growth rate, at about 10.4% annually compared to Phison's 8.4%. Visual, on-screen text, key driver, AI infrastructure and PC upgrade cycle. Let's look at their profitability, which really highlights their different business models. Visual, bar chart comparing gross profit margin, operating profit margin, and net profit margin for SIMO versus Phison 2025 figures. In 2025, Silicon Motion, with its pure design focus, had a fantastic gross profit margin of 48.1%. That's almost half their revenue going directly to cover their core product costs. This translated into healthy operating and net profit margins too, and a strong return on equity, over 21%. They're efficient because they don't own big, expensive factories. Phison, because it buys and integrates raw memory, had a lower gross margin, around 34.2%. The cost of those raw memory chips eats into it. However, because they deal in such high volumes, Phison can generate huge operational leverage. In fact, in Q4 2025, driven by enterprise AI demand, their quarterly gross margins jumped to 41.7% and operating margins hit 14.6%. Their full-year return on equity was still a respectable 18.5%. Visual, on-screen text, SIMO, higher margins, asset-light. Phison, volume-driven, operational leverage. What about dividends for investors? Visual, table showing trailing dividend yield and payout ratio for SIMO versus Phison. Phison tends to be more attractive for income investors right now, offering a trailing dividend yield of over 4%. Silicon Motion's yield is much lower, around 0.3%, mainly because its stock price has gone up so much recently. Both companies' payouts can be a bit volatile due to the industry's cycles. It's also worth noting that Silicon Motion has been investing heavily in its future, with major capital expenditures for new headquarters, which has temporarily impacted its free cash flow. Visual, on-screen text, SIMO, lower yield, high capex. Phison, higher yield, more volatile payouts. In terms of market position, both are clear leaders in the merchant controller space. Silicon Motion has historically dominated client SSDs and PC manufacturers. Phison has been strong in consumer retail and gaming drives. Visual, graphic. Merchant versus captive controllers. With logos, but the game is changing. Silicon Motion is making big moves into enterprise data center drives with its MonTitan platform, directly challenging bigger players. And Phison is leveraging its hybrid model to secure market share in customized enterprise and AI storage platforms. They are increasingly competing head-to-head, especially in the booming AI sector. Visual, on-screen text, shifting landscape, both eyeing enterprise AI growth. What are the big growth drivers and risks? Visual, split screen, growth drivers, on left, risk factors, on right, with bullet points for each, growth drivers, AI PCs. Next-gen PCs need fast local storage for AI, driving upgrades. PCIe Gen 5. New, faster technology for enterprise servers, where SIMO is winning big contracts. Automotive. Self-driving cars and infotainment systems need robust flash storage. Risks. Customer concentration. Silicon Motion, for example, relies heavily on a few big clients. Geopolitical concentration. Both companies have key operations in Taiwan, which presents regional risks. Foundry dependence. They both rely on a single dominant manufacturer, TSMC. Finally, let's talk about valuation. And this is where it gets really interesting for Silicon Motion. Visual. SIMO stock chart showing a significant recent spike. On-screen text. SIMO valuation. Is it too high? While Silicon Motion has achieved some impressive milestones, like optimizing its controllers for NVIDIA's AI environments, its stock price has absolutely soared. It's up nearly 350% in the last year. This rapid rise has pushed its valuation metrics way beyond historical averages. Our analysis, using methods like discounted cash flow, estimates Silicon Motion is currently overvalued by about 56% from its recent trading price. Other financial analysts and services, like Guru Focus, also rate it as significantly overvalued. Visual, on-screen text, SIMO, estimated 56% overvalued by DCF. Analyst consensus, potential downside. So, what are the actionable takeaways for investors? Visual, split screen, growth investors on left. Value/income investors on right. For growth-oriented portfolios, Silicon Motion is a pure-play bet on high-margin controller design, especially for AI and enterprise. It's asset-light and converts revenue growth efficiently. However, its current valuation is a significant headwind. Phison offers a volume-driven growth play. Its hybrid model allows it to capture full storage module value, which can be great during hardware shortages, and it's showing strong momentum in AI storage. For value or income-focused portfolios, Phison currently looks like the more attractive option. It has a higher dividend yield and consistent profits, though its payouts can be volatile. Silicon Motion, despite having a debt-free balance sheet, is currently trading at a very high premium. Its dividend yield is compressed, making it less appealing for income right now. Visual, concluding screen with both company logos and a question. Which one is right for your portfolio? Ultimately, both Silicon Motion and Phison are critical players in the digital storage ecosystem, benefiting from the massive demand driven by AI. The key differences in their business models impact their risk profiles, profitability, and current valuations. As always, do your own thorough research before making any investment decisions. If you found this breakdown helpful, give us a thumbs up, subscribe, and let us know in the comments which companies you'd like us to analyze next. Thanks for watching, and we'll see you in the next video.